Okay. Hi, everyone. Thanks for joining me today. Monday, April 4th. And just a very quick disclaimer, as always, this trading room, this session is for educational purposes only. As you know, trading is a risky business. Of course, do not risk money you cannot afford to lose. Anything I say here is my own opinion, and feel free to ask anything you want about any currency pairs or any other financial assets. Any examples I give or analysis I give are simply for demonstration and or any trades I take for demonstration, not as trading signals to buy, hold, or sell any position. Very quickly, this week, not too many economic events. In Australia, there are retail sales tonight and interest rate decision tomorrow. Composite PMI in Great Britain and services PMI. Non-manufacturing PMI in the US. All times here are GMT. On Wednesday, construction PMI in Great Britain, IV PMI in Canada, crude oil inventories should be interesting to watch, especially now that Biden said the US would use emergency oil inventories or oil reservoirs in order to reduce the gas price in the US. And to somehow limit a little bit the inflation rate there. FOMC meeting minutes on Wednesday as well, and in Europe, monetary policy meeting, and in the US, initial jobless claims on Thursday. These are the main events. Dollar index still bullish. I mean, it's kind of moving sideways in the last few weeks, some sort of consolidation. Hasn't reached the supply zone that I've marked around 100, which is also a round number, and dollar index may very well reach there. But for now, dollar is relatively strong, at least versus some pairs or some currencies such as euro, pound, and yen. Yen, very interesting. We'll have a look at yen pairs and especially dollar yen. We'll look at it in a couple of minutes. But overall, dollar is relatively strong, maybe except for the commodity currencies such as Aussie, CAD, and Kiwi as well. The currency heat map also shows you this. So Australian dollar is super strong across the board. Canadian dollar is also very strong across the board, except for maybe the Australian dollar, but they're more or less the same, maybe Aussie a little bit stronger. And other than that, obviously, the dollar itself is stronger than euro. Euro is the weakest at the moment, and so is yen. So euro and yen will be very interesting to watch. Kiwi dollar, the New Zealand dollar is very strong as well. And the Swiss franc is mixed. Swiss and pound are mixed. So let's quickly have a look at the MetaTrader at the charts. And again, if I see anything interesting, if I see any positions, I'll let you know. I'll open them, but I want to take a bird's eye view first over the majors and the major crosses. And the currency heat map, I'm Karyuki, I'm taking it from TradingView. Here is the link. I've posted it in the chat box. So euro dollar, let's talk about the monthly chart first. I mentioned it last week. the euro touched the, well, it's right above this demand zone on the monthly chart. And it's also, let me just make sure you can see the mouse cursor. It hit the demand zone, and it's hovering on top of two major trend lines. First of all, the blue one, which is relatively the short-term trend line. When I say short-term, I mean 6 years, okay, or 5-6 years, since late 2015 or the beginning of 2016. That's the blue one. The longer one, for those of you who haven't seen it yet, the longer one is a 22-year-old trend line, a very, very strong long trend line. If, and I keep saying it, if euro dollar breaks these lines, then we will see euro dollar probably hit parity after many years, after more than 20 years maybe, and even maybe lower than that. Obviously, no one knows. It can very well also turn around from here and start going up again. So interesting to watch, but these are strong areas. These are war zones. So anyone trading euro dollar has probably felt the volatility and the sideways movement in this pair in the last few weeks. So if you're trading euro dollar, I recommend that you trade short-term, intraday, take intraday trades, look for, hourly or 15-minute charts where you can spot trends or reversals more easily, because as you can see, the higher the time frame, like the daily, even the 4-hour, are pretty noisy, and the trends are not very clear. So that's for euro dollar. For now, it's the trend is, or the sentiment is more bearish. You can see it also. Well, on the weekly chart, it's hard to say. Again, it's dancing. You can see this zone. Even last year had a few months of sideways movement around the zone, and obviously now as well inside the demand zone, or just right on top of the demand zone and around these trend lines. But last year it gave a significant move to the upside from these trend lines. It just took a long time, okay, but it gave more than 1,500 pips. But as you can see, after a very long move down into the trend lines, a big ship doesn't turn around immediately. It takes a long time to turn a big ship around, and institutionals, big banks, governments, whomever, they don't flip their position in a day. They have to first distribute their holdings, so selling gradually their euros against dollars, and then starting to or selling their dollars and starting to buy euros. It takes a few weeks, a few months, and then from there the big move comes. And now again they came to this area where there could be another period of sideways movement, and we'll just have to wait and see whether it's turning around from here, or breaking and moving to new lows. That's for euro dollar. Pound dollar as well, less obviously less evident, or less conclusive. Can say what the trend here is on the monthly chart. On the weekly chart, it's definitely more bearish. You can see the moving averages keeping they keep moving, pushing the price lower. We broke previous lows from the last few months, retested these this breakout and the 9 EMA, and now probably or possibly moving lower towards this demand zone. So another leg down is possible on pound dollar. Nothing is certain, obviously, but overall the sentiment, and you can see here as well on the monthly chart, how the moving averages are crossing to the downside, how the price is stuck below these moving averages, and definitely it could continue a little bit lower to this demand zone, maybe even lower than that. So as I mentioned, with the dollar index, currently dollar is strong. The dollar is strong against euro, against pound. And most interestingly is dollar yen. Dollar yen has made in the last few weeks a tremendous move to the upside after breaching this level of 115.50, more or less. It tried to close above this level for a few weeks, almost 2 months, and eventually broke with a very strong and convincing candle. It didn't even come back to retest this level. It just broke and continued all the way straight up into this supply zone. You can see the supply zone here, lots of areas where the price came down, and the more touch points or the more tests there are to the supply zone, the weaker it gets, and eventually there's high probability it will break or be broken, and the price will breach the supply zone to the upside. But what's more interesting than that is that it looks like there's a reverse head and shoulders pattern here on dollar yen on a multi-year level. This is a 20-year head and shoulders pattern, possibly, okay? Obviously, nothing is certain, and it could start moving down from here. But if this head and shoulders pattern eventually gets confirmed, we can expect an intensive, a huge move to the upside on dollar yen. Look at this chart. I mean, it's absolutely amazing. Look at all this, all this huge empty zone. Okay, last time the price was around these levels, above these levels. Okay, here where we're at right now. Last time it was higher in 2002, 20 years ago. Before that in 1998, and before that in 1990. Okay, and before that we're going back to the 80s. Okay, I mean it's immense. This is something else. I mean, I don't know if any of us has, if this move really starts you know, moving to this domain, to these areas of, to this vast space, I don't know. It's going. What will be the macro events in the global economy that will drive dollar yen back to these highs after what, more than like almost 50 years of a downtrend? Well, not a pure downtrend, because I mean, the chart here is from 1970, 71. It went down for more than 20 years. And then on a monthly basis, it moved sideways for another more than 20 years. But now, if this reverse head and shoulders pattern eventually gets confirmed, we are going to have massive moves and huge opportunities. So watch, keep an eye on dollar yen. It's not something that happens overnight, not even over a week or a few weeks. It can take months. As you can see, these are super long-term events, but super interesting. So I'm very excited to keep an eye on that and see if eventually this head and shoulder, if the neckline gets breached, gets confirmed, maybe even retested, and we're talking about hundreds of pips to the upside and to the downside, just retesting and moving around this zone, and then of course moving up we're talking about thousands and tens of thousands of pips. Okay, but not in a month, not in a year. We're talking about years. Okay, very interesting. Keep an eye. Obviously, it will affect and have a great impact on other yen pairs as well, yen crosses. But again, not every day do you see a potential head and shoulders pattern, which is 20 years old. This is something else. This is big. This is ancient. So that's it. Obviously, on the short term, as I mentioned last week, it reached this supply zone. It immediately reacted. Look at this long candle wick on the daily chart. We see some movements, and I said there would be some retracement, either to the moving averages or to previous highs, maybe retesting the 115.50 level again. Who knows? The retest and the of broken levels and the pullbacks can be massive, because we're talking about massive levels here, okay, on a monthly basis. So the moves can be hundreds of pips, either in either direction. But overall, the trend is bullish, and any retracement back to areas of support or demand, as you can see here, for example, this is a previous high, previous the resistance, broken, retested once, retested twice, thrice, okay, and especially in areas where you have support or demand, along with bullish moving averages. This is confluence of signals, along with price action like here, okay, coming back. You have a double bottom here, you have this support line, you have the moving average, the 50 EMA in this case, you have this spinning top showing like reversal and potential continuation to the upside, and you have between these two lows, which are at the same level, you have a bullish divergence. So you have all the reasons in the world to enter long around this area, because you have an uptrend, retest of support, double bottom with bullish divergence and price action, and a moving average. You don't need more than that to go long for at least, a few. Well, here it gave 140 pips, but it can definitely give more, with a potential target to at least this supply zone and even more. Again, nothing is certain. It's all about probabilities, but this gives you a high probability trade with the trend and with the confluence of signals. That's it. So again, overall, the trend is bullish, but definitely because of this high supply zone, because of this or big supply zone on the monthly chart, because of the war zone, because it's a potential neckline of this head and shoulders pattern, it doesn't, it's not something, well, usually it's not something that gets broken in a day. Keep an eye on that. Dollar Swiss and Swiss pairs are always difficult because of the sideways movement, but just like dollar yen moved, sideways for years or months, and eventually made a strong move to the upside after this consolidation, I expect dollar Swiss and obviously following that other Swiss pairs. I expect to see a strong movement on Swiss pairs in the coming weeks, because as you can see, it's not a super accurate triangle on the pip, but still you can see here the consolidation that's been going on for a year now on dollar Swiss. It cannot go on moving sideways forever. Eventually, more energy builds up into this swing that keeps getting stretched and stretched, and it will move in strongly in one of the directions. Obviously, I think that the Swiss National Bank wants to see dollar Swiss and dollar Swiss, Euro Swiss moving up. It wants to see the Swiss losing its power a little bit and weakening against other currencies, because the Swiss National Bank doesn't like the strength of the Swiss franc. It hurts their exports. So if eventually this triangle and this sideways movement breaks to the upside, it'll be a relief for everyone. I've been telling you for weeks now, if not months, that we're really waiting to see this movement, this convincing movement on dollar Swiss and Euro Swiss that will enable us finally to reduce or actually remove the margin requirements or the higher margin requirements we're taking on Swiss pairs. We're taking them because our liquidity provider, where we execute our trades, your trades in the market, the liquidity provider is, giving us or requiring from us these high margin requirements, and therefore we have to limit the margin on our side as well, or increase it to be more accurate. So that's it. I really hope dollar Swiss will break to the upside, hopefully in the next few weeks. But you see, it doesn't happen in a day, and it doesn't come without a war. But eventually, it will break to either side. We'll just keep an eye. Other than that, I can't say much. I mean, if you want to trade it, just take the short-term trades, because obviously in the midterm to long-term, the trend is very unclear. Just be careful. And again, I hope a strong movement will come to the upside. Otherwise, if it breaks to the downside, we may very well see another intervention, a more serious intervention from the Swiss National Bank, which has already gave a hint maybe a couple of weeks ago, that it doesn't like the levels at which Euro Swiss is at, and it immediately jumped to the upside. It said something about intervention, and that was enough a little bit to move the Euro Swiss to the upside, but we'll keep an eye. Dollar CAD, I said last week, is in a bearish momentum or bearish sentiment after breaking this trend line, the blue trend line, to the downside. It retested also the moving averages and the trend line, and it looks like it's about to continue lower. We'll have a look later at the indices and crude oil and other financial instruments as well. But overall, Canadian dollar is growing stronger against the dollar, and it could very well continue moving to the downside, at least maybe retesting again this demand level, which gave a nice move to the upside, but didn't manage to push dollar CAD higher than that. It found resistance around previous lows, around previous support levels, which turned to resistance. You can see all these trials here, and how the sellers came pushing dollar CAD back down, and the moving averages, after a long-term trend to the upside, and after this long-term distribution, the moving averages are now turning to the downside. The 9 EMA below the 21, below the 50, after they have crossed to the downside already last year. And now, as the price retested them and started curling down, the moving averages seem to start moving down again. Obviously, the major support level is around 120. This is sort of like the last fort before dollar CAD breaks even lower. Aussie and Kiwi, they are, I think, the kings at the moment, the kings and the queens. They keep growing stronger against the dollar, unlike euro and pound. So obviously, euro Aussie short, euro Kiwi short, pound Aussie short, pound Kiwi short. These were extremely profitable trades or positions in the last few months. They went down hundreds of pips. So Aussie keeps pushing higher at the moment. I mean, the trend in the long term is not super clear at the moment. You can see it also from the moving averages, which are kind of entangled with each other. There's not a clear trend, but if Aussie dollar eventually breaks above this level, this supply zone, it could move higher into higher levels. For example, this supply zone above, or even higher. But again, for now, you see on the weekly chart, the moving averages starting to open up to the upside. And the daily chart is also very strong, supported on top of the 9 EMA. So a breakout above this level of around 0.7550 or so will give tailwinds or renewed momentum and a push to Aussie dollar to continue up and potentially retest previous supply or previous support levels. As you can see here, it's not too far away, but this is also a resistance level that a support level that turned to resistance that should be taken into account, especially if you're trading short term. Just be aware of that. But as you can see on the 4-hour chart, if you're looking to go long, well, hourly is very, very noisy, but the 4-hour chart looks like it's moving sideways, and the 50 EMA for now is serving as nice support. And eventually, if it breaks these highs, we can expect a push to the upside, at least to this resistance line, currently around 80 pips above. So that's for Aussie dollar. Again, very bullish for now, and so is Kiwi, a little bit less bullish, but still more bullish than other currencies except for Aussie and maybe CAD. Not much to say about it at the moment. Kind of moving up, but not very strongly. A lot of noise. So looking for, intraday trades, I think is better at the moment. But again, overall, the momentum and the sentiment for Kiwi dollar is more bullish. Once the 9 EMA, you can see how the price is sitting on top of the 50 EMA, and usually when the trend turns around, it happens many times that the price retests the moving averages after it crosses them, and as the 9 EMA crosses the 50 EMA, it gives renewed momentum and pushes the price up. So it can take another week or two, and then we may see Kiwi dollar, going to the upside. Obviously, we see some weakness here, and it can go also down. As I said, the trend is not very clear at the moment. Lower highs, higher highs here, lower lows here, but overall, not a very clear sentiment. Short term, a little bit more bullish. Euro pound has been moving sideways and a little bit to the downside for a few months now, actually almost a year. Looks like maybe accumulation, okay, or distribution of the sell positions and maybe accumulation to the upside. You see this trend line, and I think only once the price, if the price breaks above the 50 EMA and above this trend line, can we say that a new trend is evolving. On the monthly chart, we can see here some sort of potentially reversal candles. Okay, after this move to the upside, it hasn't managed to break these previous lows. So as long as these previous lows remain intact and the price doesn't close below them, there is still potential of an upward movement. Obviously, if euro dollar breaks these levels, these historic levels, the historical levels I've mentioned before, it euro dollar can go down, but for now, the market hasn't decided where it's going. I see a little bit of price action. You see these bullish candles, an engulfing candle here, an engulfing candle here, another sort of engulfing candle here. So looks like buyers are stepping in. You can see the bullish divergence here, but I want to see confirmation in the form of a close, a clear close, at least on the daily chart, above this this blue trend line, and maybe on the weekly chart above this 50 EMA. So that's shortly about a little bit about euro pound, euro yen, and in general, yen pairs have made significant moves to the upside recently, but as I mentioned last week, they have many of them have reached very strong resistance levels. So there can be some sort of a retracement here. These are monthly resistance levels. So expect some, tug or tug of war or a war between the buyers and the sellers. You can see these long candle wicks, and there can be another retracement to the downside, maybe a retest, for example, on euro yen, a retest of this trend line that's been broken to the upside. If indeed it goes down to this level and gives you price action, it can give you a very nice opportunity to go long. Again, retest, price action in the form of some sort of a spinning top, a doji, a morning star, some sort of confirmation from the price itself that the buyers are coming in, and then you can join the trend, the resumption of the uptrend to the upside. Again, this is also along with the overall picture on dollar yen, with what I mentioned about a multi-year reverse head and shoulders, a very super bullish pattern. So keep an eye, but yen pairs can definitely give you amazing opportunities in the coming weeks and months. Pound yen also gave this very strong rejection from this resistance level. Again, on the monthly chart, look at this bearish reversal candle on the weekly chart. This is a huge potentially huge reversal candle, or at least a it shows that the sellers came in, and there was a big war between buyers and sellers last week. But it doesn't mean the trend will reverse. I mean, it can, but the first level that it has to go, if the sellers want to gain control again, is to go below this zone, this resistance zone that now can turn to support. We have the moving averages opening up again. We have this trend line, the blue trend line, that served as resistance for a few months. And look at this breakout candle. So the buyers came in full on, and a reversal, a retest of this level again, just like euro yen. can give you amazing opportunities to go long if you see price action. Obviously, if a bearish candle comes and breaks this level to the downside and closes below it, don't go long. Okay, either wait for a breakout of this level again, or if it retests and continues down, then maybe this whole move is this whole bullish breakout is just a false breakout to the downside. But overall, at the moment, and you can see the moving averages on the monthly chart, the overall momentum, and as we said, the head and shoulders pattern on dollar yen, we can definitely expect more upside movement. And I mean, you can see these huge moves to the downside and the upside. Euro yen, pound yen, they can all give you amazing moves once momentum evolves, and it looks like it's building momentum to the upside. Just don't enter like in the middle of nowhere. Wait for areas of like reference areas such as this trend line, this zone, resistance zone turning to support, moving averages. Look for these areas that can give you a reference point to show you support, to show you to give you price action, and obviously to give you a reference point of where to place your stop losses or where to exit should the price turn around and goes against your position. Yeah, okay. Swiss yen, this is a beautiful move. Again, I don't know what happens with Swiss pairs if dollar Swiss and euro Swiss start going higher, but obviously, even if the Swiss franc gets weaker, if the Japanese yen gets even more weak, okay, gets even weaker, then then we'll see Swiss yen continuing its upward movement. But again, look at this zone. It's not something that should be crossed in a day or two. There's a strong resistance level here, a place where the price moved hundreds of pips down, or even thousands of pips down before moving up again. And we can see a potential. Again, I'm not saying this is what will happen, but we can see a potential, for example, pattern, a bullish pattern, but a potential cup and handle. Okay, the cup and the handle, this is a bullish pattern, but the handle by itself is counter trend. So obviously, if the handle does happen or does evolve, we can see here a move even of 1,000 pips down. Okay, from 132 to 122 or so, okay, or to previous support levels. So the handle, okay, is part of a bullish pattern, but the handle itself, just like the cup, half of the cup is bearish, half of the cup is bullish, and so is the handle, bearish and then bullish. So you can see here, for example, this resistance, and then a breakout, a retest, and a continuation. If indeed we get a handle of the cup, then we may very well test this support line again. But this is just, an assumption, something to think about. It doesn't mean necessarily that it will happen, and it can very well move sideways inside the zone and then continue higher. Look at the moving averages, how they push the price and give very, very strong support, at least at the moment, a very nice support from the 9 EMA. And then if the price retraces, it can get support from the 20 EMA. Eventually, maybe it will go all the way down and get the support from this support line and the 50 EMA. It's a move that can take weeks and months again, but very interesting to see. Just one thought about, and I'm showing you this as a you know, like a sort of a my thinking process of how I view the charts in the long term. It doesn't mean I trade by it, because we're talking about uh, uh, things that can take months and years, but still interesting to see. And then I say, okay, if this evolves, I can expect sideways movement or even a deep retracement, and it's not something I should be surprised of. So that's for sorry, uh, that's that's for a Swiss. Where is it now that I hold on? Yeah, okay. This is for dollar Swiss. Sorry, for Swiss yen, a potential pattern. Okay, CAD yen, also super bullish, just like all the other yen pairs. Again, reached this supply zone, so we can we can see the potential retracement here, a retest. Let's wait and see what happens around this zone, just like I mentioned on other pairs. Excuse me, just one sec. Yeah, sorry about that. Okay, let's move on to Aussie yen. So Aussie yen is because Aussie and Kiwi are super strong, we can see the momentum to the upside. And look at this trend line, the red trend line, how it's been, well, potentially breached to the upside and retested. We can see further movement to the upside, and I expect ASEAN to continue moving higher at least until the supply zone above. Aussie and Kiwi yen are moving higher, and these supply zones are the next target. So ASEAN on the monthly chart, we can see a potential move of at least, I don't know, 700 pips, not immediately, but look at this amazing move, really. I mean, a breakout of this resistance and an immediate move of hundreds, like 500 pips to the upside. Look at the moving averages, super bullish. There may be some consolidation here, but this trend line that I drew, this trend line can serve as support, and obviously other or previous levels, for example, this support turning to resistance, these levels can serve as support as well. Because the price is far away from the moving averages at the moment, we may expect some consolidation. And just like I said, on other yen pairs with these long candle wicks, we can even see a deeper retracement before continuing up again. But ASEAN and Kiwi yen, because they breached previous highs and previous resistance levels, are expected to move higher or faster and move more than other yen pairs to the upside. They have stronger momentum. Yeah, they are all forming these long candle wicks that look bearish, but as long as we don't get a bearish confirmation candle, the upward momentum can continue. Caution, just be cautious, because we can see some reversals or retracements in the coming days and weeks. Aussie Swiss, is still in the danger zone. Unfortunately, I was expecting or hoping to see some sort of a reversal candle on the monthly chart. I mean, we can definitely see some retracement, some bounce or pullback from the buyers here, just from these previous support levels. But the monthly chart of March is not convincing enough, and there can be another leg down. For me, look at these. Look at last week, a long candle wick, a long push from the sellers, still below the moving averages. I think I want to see Euro Swiss at least above 104 in order to start gaining some momentum to the upside and more confidence about the direction of Euro Swiss. For now, it's still super bearish, and if it continues going down, we will see intervention from Swiss National Bank. And we know from the past that these interventions are violent. Look at this candle here. Here, this gap here, once it removed the floor, this gap caused FXCM, a huge Forex broker, to go bankrupt. So we are very cautious. We're in a war zone. Okay, this whole area is a war zone. So for now, be very cautious. Preferably go long on Swiss pairs or short on the Swiss franc itself. But the problem is that if you want to be on the safe side, you should short the Swiss, but on the other side, on the other hand, you may lose money. And therefore, I just recommend at the moment, and especially since it's taking more margin, just trade other pairs. At least I know it's been taking too long, but it's better we prefer being safe than sorry. Last but not least, gold and silver are very, very, I don't know, I would say confusing, because the monthly candle may hint weakness. This is not a bullish candle, even though we're in a bullish trend. It's not super bearish, but it's not super bullish as well, obviously. I mean, there is weakness here. We see the sellers coming in. This whole pattern could turn into double top on the one hand. On the other hand, obviously, as long as we remain above this trend line and above the moving averages and above this area, then the trend is still intact. It's still bullish. It's more bullish than bearish, but it doesn't mean that that it's safe to be bullish. It's not very safe to be all long, because as you can see, there are still sellers here. Look at these candles. If you want to be more confident with long gold, then at least wait for these previous highs, or at least the level of 1975 or so, to be broken to the upside, to be breached. But gold can also go down, retest this trend line, and obviously it can go even lower if this turns to be a double top pattern. Okay, or even worse, this whole thing to become a double top. Who knows? I mean, I find it hard to believe that gold will go that low, but for now, just bear in mind that sellers are still in the game, and yeah, the level of 1975 is preferably the level you want to see the gold above, in order to be more confident about the long term. or the uptrend. But again, for now, if you're looking for short-term trades, yeah, I mean, it's hard to say. Just wait for previous levels to be breached or broken. We'll keep an eye. We'll keep an eye. For now, the trend is not very clear. There's a war here, definitely a war around previous all-time, well, not all-time highs, but there's war around this level. All right, and silver also broke above this trend line, above this level, but not managing to push off from this trend line. It pushes off, but then getting pushed down again. And you see the monthly candle shows that sellers are still in the picture as well. Gold hasn't managed to reach previous highs. Sorry, silver hasn't managed to reach previous highs like gold. So it's a little bit weaker, but moving averages are still giving some support. So if silver manages to break at least above these previous highs of 25, 90, 26, we may see resumption of the uptrend. Yeah, not much to say other than that. It's just you can see the sideways movement. Maybe eventually it will break to the upside with a serious candle. For now, sellers are still in the picture. So very quickly, let's have a look at the markets and see what the markets have to say. So again, this is the dollar index. Started the week with an upward move. The indices last week closed with some sort of hesitation after 2 strong weeks. And you know, the monthly candle was pretty bullish, but inside, let's draw this, inside a newly formed supply zone. So we have now this monthly supply zone on the S&P. These are the S&P futures. NASDAQ also very bearish, gave a bullish month, but in a bearish scope. So if the markets continue going lower this month, we may see the dollar growing stronger again. Russell as well, sort of consolidating in between these moving averages, and Dow also after breaking this trend, this channel, is now retesting it from below. All the indices, or at least the index futures, are sitting on top of the 21 EMA. They found support there. So the momentum is still overall bullish. It hasn't completely reversed. But there's growing sentiment of well, potential reversal. Let's see how this how the coming weeks evolve. Gold and silver we've already discussed. Okay, silver still not managing to break or give new highs. Crude oil, look at this monthly candle coming from this from this monthly supply zone. So it touched it and immediately bounced back down. It could retrace a little bit to the downside and then find support around this level of previous highs and the moving average, maybe. But the momentum is still bullish at the moment. Let's have a look at DAX, David. DAX, haven't looked at that, the German index for a while now. Yeah, so DAX actually very interesting. I mean, it let's just draw this resistance line here. So previous resistance broken, retested. There was some distribution here and a strong push down. This monthly candle is pretty, well, pretty bullish, I have to say. And as long as DAX remains above this level of, well, I'm not sure if to draw just a line or maybe a zone, it would be better to draw this zone around here. There's a whole zone here between 1322, yeah, 13,200 to 6 or 700. Yeah, this zone is a strong support zone, a strong potential demand zone. It's not that the uptrend of DAX was perfect. Obviously, we can see here higher highs, but also lower lows. So not very clean. And on the weekly chart, you can see after this distribution, it reminds me a little bit of DAX, of Russell 2000, but after this distribution, there was a sort of a false breakout to the downside of this level and then a resumption to the upside, but the moving averages have already turned to the downside. We can see a retest of the 21 and the 9 EMA, and eventually it broke, it closed below. And I think that this move to the upside was maybe just a corrective move of the downward move, and we can see the downtrend resuming maybe in the coming days. A break below this level, below this previous support, will be very bearish for DAX. On the other hand, if it manages to remain above this level, more or less, okay, it's a wide zone here, but this is a strong, potentially strong zone, and this pattern of a gap down and eventually a break to the upside is pretty bullish. I mean, there are signs to the upside and to the downside, okay, but this whole area is the decision area for DAX, whether to retest and turn back up and resume the uptrend, or break it down and continue lower. So just like I said on the US indices, the trend is still overall bullish, but with increasing signs of sellers and increasing bearish signs. So that's about DAX. Very quickly about the 10-year yield that completed the reversal head and shoulders pattern, retested it and continued higher. And as the interest rates go higher, we may expect the yields to grow higher. I don't know if you've heard about the yield curve inversion, but the lower or the shorter bonds, the shorter treasuries, their yields or the return on the short-term bonds is now, on some of them, is even bigger than on the long-term bonds. This usually hints or signals a potential recession coming. At least that's what the market is thinking, because if you want more or higher yields on the short-term bonds than on the long-term bonds, then you're expecting some recession or some downward move in the equity markets, and you want to find some safe haven in the short-term bonds. You think that the interest rates will go up fast in the short term. So all of these, signal indecision and fear in the market and hesitation and concerns. But we are talking about very long-term trends. And as I mentioned also on dollar yen with the reverse head and shoulders, you can see here the 30-year bond yields moving in this downtrend channel. Are we going to see a breakout to the upside? Interesting, and we have to wait and see. Bitcoin as well is very interesting. On the one hand, a potential double top, strong bearish candles. On the other hand, also, just like the indices, finding support on top of these on the 21 EMA. If you see the quarterly candles, look at the the 3-month candles. Okay, each candle here signals or signifies 3 months. So look at this candle here, a lot of indecision, and after very decisive candles from Bitcoin in the last few years, we see some indecision. Again, a lot of indecision in the market. So that's it for today, a long-term review of long-term trends. I hope you found it interesting. Thank you, David. And that's it. So we'll be here tomorrow. By the way, I'm aware of some problems with our dashboard, some technical problems. We're working on them. Something with a database with not fully synchronized with MetaTrader. Hopefully we'll resolve it in the coming hours or in a day or two. Thank you very much. Thank you, Dave. Thank you, David. Thank you everyone for attending. Have a successful and fruitful week. Keep safe, take care. Thank you, goodbye.